Good morning, good afternoon, good evening, wherever you are in the world. My name is Hugh Morris. I'm a senior research partner here at Zien, and it is my absolute pleasure to introduce today's webinar, Central Bank Digital Currencies in Europe, with a fascinating discourse from our guest speaker, Tim Richards, and a session that I think will be of huge value to the audience now and the future audience who will watch this online. First, I would very much like to thank all our sponsors who allow us to range widely and freely across technology, economics, and finance. Without them, we couldn't possibly put on this program. And as someone who chairs a number of these, I know how good this program is, and I commend it to all, and I thank our sponsors. So looking at the agenda, essentially, I will get out of the way as fast as possible. Tim will then deliver a really interesting discourse, and I've read his paper as well as looking at the presentation. It's outstanding. And after that, we will have about 20 minutes questions. Please put your questions into the chat, and I will receive them and relay them to Tim on your behalf. So, without further ado, Tim, the floor is yours, sir.
Well, thank you very much. Well, good morning, good afternoon, or good evening to all of you, wherever you are. Sounds like an echo what I do here. So, yeah, so this white paper was written on behalf of EACHA, who are the European Association of Clearinghouses, for presentation to their members. So I imagine most people on the call know what a clearinghouse is, but essentially the party that sits in between payments on one side and payments on the other, and actually you make a payment to them and they make a payment to the endpoint. So this is Ach Interoperability. And this was a piece of, I suppose, thought leadership for them, just to try to get their members to think a little bit about what CBDCs might mean for clearinghouses. That was the idea. And very interesting it was too. So Peter, if you could just slot on one. So what we aim to do was to look at it from the European perspective. There are much broader perspectives in this, and also look at it from the point of view of all the various entities that are involved, which includes obviously ACHs. So the papers were based on interviews and research, etc., etc. And at the end of the day, what we were trying to do was to come up with something actually of value to the members, to get them to think about what CBDCs might mean for them, to get them to position themselves in terms of what they were actually going to be doing, and possibly come up with some actionable points where they could actually take things forward. Remains to be seen how successful that was, I think. So I wrote this alongside Christian. So Christian is the founding partner of a company called Norfico, who are technically a digital payments PR consultancy, but they do actually do a lot of real consultancy as well. So Christian and I do an awful lot of work together across the Nordics and also across Europe. So we put this together between us. So Peter, can we just jump on one? So one of the things we wanted to do, especially after having talked to a number of the EACHA members, we wanted to try to get across the message to them that CBDCs are a real thing. Right? They're not some theoretical concept that central banks are playing about with. They're not some idea that's in the ether. I mean, central banks are taking them very, very seriously, and they're actually spending quite a lot of money on them. And this is not just about improving payment systems, although often it's the improvement of the payment systems that's given as the reason for CBDCs. A lot of it is geopolitical. A lot of it is about, if China does it, the US will do it. If the US will do it, then basically the EU will do it. What happens when you can access the digital dollar anywhere in the world? Does that start displacing existing fiat currency, etc., etc., etc.? These are quite major concerns. And most of the people in the payments infrastructure look at the specific reasons given, and we'll talk about what those are, and start addressing those by going, well, we already do that. You don't need to do that. You don't need a CBDC to do that. You can do it anyway. And it is kind of missing the point, I think. So as you can see, there's a lot of CBDC projects around the world. various states of play. Very few of them are actually launched. There's about 9 that are launched. They're all pretty small. Possibly Nigeria is the biggest. The ones that have been launched have tended to use existing DLT technology. The vast majority of the ones that are in research almost certainly won't. We'll talk a little bit about that as we go through. And this is now quite an old slide, because I think this deck dates back to May, and there are more programs out there now, and lots of progress being made, particularly in the US and the digital euro, which is where this was focused. And there was a huge amount of work going into the digital euro. So let me just step on one. So these are the sections of the paper. So if you go and read the paper, basically each of the following slides actually address one of the sections in the paper in the order that we wrote them, unsurprisingly. And the aim was to give an overview of CBDCs without actually doing a 101. We did make the assumption that people in the payments industry ought to have actually done a bit of basic research about what a CBDC actually is. But they are a digital currency that's backed by central banks, and they are equivalent to cash. Okay? And they're not a cryptocurrency, and they're not a stable coin, and they're not necessarily blockchain based. And in fact, as I just said, the thrust of most central banks at the moment is away from distributed ledger technology, and that's for a number of reasons. But one of those reasons is the perception of lack of scalability, which may or may not be true. And another is, I think, just generally the feeling that you could easily lose control of one of those things when these ledgers start being distributed across various members. That's not to say distributed ledger technology may not be used in parts of various CBDC systems. For wholesale payments, they would appear to be quite a good solution, but this paper wasn't focused on wholesale payments, it was focused on retail payments. They come with certain attributes, so they have to be convertible into cash, they have to be interoperable with other payment methods, so, direct to account, credit cards, etc. And they're expected to be inclusive for all citizens, in the same way that cash is. Okay? If you've got digital cash, it has to be functionally equivalent to real cash. So if I can spend real cash, I have to be able to spend digital cash. I have to be able to get access to it, and I have to be able to find ways of using it. And those raise some very interesting questions about system design when you start thinking about it. Because, for example, you cannot assume that every citizen has a mobile phone, has a smartphone. You can't assume that every citizen actually has a bank account today. And we end up in some very interesting and complex discussions around KYC and AML and how all that works. And those things are, well, it's going to take a while, I think, to sort those out. Lots of discussions going on around them. But this requirement for inclusivity is taken very seriously. They may be account-based or token-based, which again, most of you will recognize what that means, but account-based is there's no money being moved. Token-based is there is a token that represents some CBDC that's being downloaded to some device somewhere, and that's then being moved about. And there's no real decision on which of those is actually going to be used broadly. And again, there are lots of different factors that affect which route you might or might not go down. I'll mention some of those later on. They are expected to be able to operate in all existing use cases. That is a requirement. And they're also expected to be able to operate in all future use cases, which is a very interesting requirement. So if you think about future use cases like, the Internet of Things, machine to machine, metaverse, those systems, those solutions pose scaling problems in a way that we actually don't handle very well today with existing payment systems other than with subscriptions. And we're not talking about subscriptions here. We are talking about, click to pay, whatever the minutiae of this this payment is, and therefore the CBDC needs to be designed to support that. And that gets us into some very interesting designs where the edge of the network needs to be holding data, and it needs to be holding some payment capability. All of these things are basically playing into what CBDCs are and what they're not. And depending on which central bank you talk to, you will get a different answer to some of those questions, but not all. Peter, can you step on, please? So the next section was on using CBDCs for payments. We wanted to try to get the message across about how this thing might actually work. So if we think about existing use cases, just taking three obvious and simple ones: P2P payment, a retail payment, and an e-commerce payment. You know, we know where the funds flow. We know how that works. The question is, how does it do it in a CBDC world? And the answer is, well, actually, not a huge amount of difference from things that we've actually seen in the past. You know, basically, you've got some kind of processor that sits in the middle. Now, it's generally not called a processor. You know, it's going to be a PSP or it's going to be an intermediary, but it's going to mediate the interaction with a ledger somewhere. Now, this design shows a ledger at the central bank. That is absolutely not necessary. You know, the ledger could be distributed to commercial banks. It could be held in other parties on behalf of the central bank. Basically, there are a bunch of different architectures that can be deployed, and various central banks at the moment are looking at the way that that might be done. So, for example, the Boston Fed has done a very interesting experiment called Project Hamilton, which looks at how transactions can be scaled up on the ledger in order to meet the kind of requirements that we'll potentially be facing if we actually move to a CBDC. Like a lot of the experiments, they're very focused on technology. And I think, as we'll talk about a little bit later, that's an issue. They're not actually focusing on some of the other things that are really, really important. But the thing about this processor model is for the ACHs here, i.e. the clearinghouses. Yeah, it looks a lot like a clearinghouse if you have that in place. Difference here is the money may not be being settled on these third parties, which is a real significant change. There are issues here. I mean, there's issues around KYC and AML. How do you do that? Who's going to do that? Inclusivity. So basically, inclusivity will mean ruling out the use of smartphones as the only CBDC carrier device. You can't do that. And we have a long history in the payments ecosystem of failed projects, things that didn't work. We know why things worked and why things didn't, and we should be articulating that to central banks, because they don't know. They don't have that history. They're coming at this entirely new, and this is something we really need to start getting the message across about how tricky this actually is going to be to do it well. The other factor, and again, I don't touch on that elsewhere in the paper, is there's quite a lot of interest in cross-border CBDCs, so MCBDCs. And again, for obvious reasons, we all know about the inefficiency in cross-border payments. So that may become a driver, but given these systems are being designed in silos, it will be interesting to see how that can be architected. Okay, Peter, move on, please. So we then try to outline the potential roles of the various parties that are involved. And some of this comes as a bit of a surprise to central banks. So, for instance, the idea of governance, which is effectively a scheme. Somebody has to do that. Who is it if it's not the central bank? Well, it might not be the central bank, but there's other things you can do. But we can roughly define roles for central banks and commercial banks and payment processors. And then we end up with some stuff that we don't know where it sits. You know, who is the scheme operator? Who manages risk and fraud management? You know, who manages onboarding and KYC? Who manages liability? What are the business models? Who's going to make money out of this, and how are they going to make money? You know, this is public money. You know? So how do you make money off public money? You know? I mean, at the moment, cash is a drag on most businesses, but you do it because it's the only way of getting paid by a certain segment of society. The same might apply here if it's not designed well. So there's all sorts of interesting questions around how this might work. But you know, if you look for a solution that actually needs to be rolled out in a reasonable time frame, we think you need to engage with the existing payments industry. You know, you're not going to be building all of this stuff from new. And we have a lot of knowledge, particularly around the fact that most of the cost in a payment system comes from when it goes wrong, not from when it goes right. When it goes right is easy. It's when it goes wrong, you've got to fix problems. That's the issue. And you know, there's a bit of naivety, I think, some of the time about the fact that things won't go wrong because the way the ledger works and whatever. And it's clearly not true. You know, somebody can break the KYC model, set themselves up as a merchant, take somebody's money, transfer it out of the system, and run away without delivering anything. You know, that's entirely possible. So, yeah. So basically, there's a whole bunch of things to be resolved. So, yeah. But I do think, and the point we made to the EACHA members is there's a real opportunity for people in their position and other parts of the payment system to engage with central banks in a positive way as opposed to a negative way. We'll move on to the next one, please, Pam. So we wanted to end sort of looking at the challenges. It says challenges and opportunities. I'm not sure there's many opportunities on this slide, but there are quite a lot of challenges. So we touched on inclusivity. It's a requirement for all central banks. You can't have public money that certain people can't have access to. So you can't rely on bank accounts and you can't rely on smartphones. So then you're getting into cards and card issuance potentially, and physical POS acceptance. And that raises whole sets of different questions about who owns that infrastructure and how that's going to work. And that moves us on to the next point about, how do you manage acceptance? Is that a regulated environment? Are you going to regulate everybody out to say you have no choice? Okay? And that is one of the things that some central banks are actually looking at. This is legal tender. They will define legal tender however they want. And in this sense, legal tender means you have to accept it if somebody walks into a shop. So, that's a challenge. Offline is a major topic of conversation. It's been discussed in every single central bank. Because again, the offline use case is critical to resilience, which is one of the purported requirements of a CBDC. So how do you do a fully offline peer-to-peer transaction in a secure way? And that's something that we at Consult Hyperion are particularly experiencing going back about 35 years. And there's been a case made that it's not possible, and that's not true. But if you do it, you end up with new fraud cases. All right, so you end up with cases where essentially it's just like cash. It's possible to forge cash. So it's potentially possible with a piece of technology out in the field to forge CBDC. Not a problem. The problem is detecting it. Anonymity and pseudonymity. So anonymity is what you expect from cash. Almost certainly not an option for CBDC. There will be KYC of some form. So how does that fit in? How do you build the privacy requirements around it? User consent. So obviously there's going to be some form of strong customer authentication. And then there's going to be incentivization. So how are you going to incentivize these things to work in competition with other retail payment methods? So for example, in Brazil, we've seen a central bank mediated instant payment solution, it's not CBDC, called Pix, which has taken a significant part of the existing e-commerce payment volume. Because it's cheap and it's accessible to everybody because they're essentially mandated to use it, and all the banks are mandated to produce it. So there are ways of making this, forcing this on the ecosystem. But these issues, they all represent an opportunity. And again, the industry needs to engage with central banks to solve these problems. So Peter, move on, please. So, in conclusion, we saw 3 potential roles for ACH providers, which obviously was the point of this paper. So first of all, they could operate as payment service providers in a multi-tier solution. So they are the intermediaries, effectively they're probably managing wallets. They're accepting instructions from users, whether those are consumers or merchants or other businesses, other forms of entity. And they're passing those around the system in a secure fashion. Definitely a role that will need to be performed, probably in every single architecture of a CBDC. They could be intermediaries. In fact, they probably will be intermediaries because you actually need to connect the CBDC to the existing payment ecosystem. You're going to need to move money into the CBDC and out of the CBDC. So there's a challenge there about how do you do that? Somebody's got to do it. It does rather look like European clearinghouses are in a good position to do that, and therefore remove part of the overall infrastructure that needs to be built in order to support a CBDC. And then, well, this is an outlier, I think, operators of CBDC nodes in a distributed system. I don't see any major central bank looking at DLT at the moment. No one is looking at it. It's simply not on the agenda, so that would be pretty much an outlier. But the thing we kind of finished on was to say, look, we understand that some of these requirements appear to be met by the existing payment system. You can map arguments about resilience and arguments about inclusivity, but that's a side issue. The major issue here is that they want to do it. They want to do it for geopolitical reasons. They want to do it because the thought of private sector money taking over from public sector money, which was the possibility behind Facebook's Meta's Libra, actually frightened them, I think. They were quite worried by Bitcoin until they really understood what it was. But yeah, they saw Luna, as it was, as being a potential threat. And the idea that you might have private sector money out there displacing public sector money, which means that they lose control of money flows and things, becomes a real issue to them. So I do think, a lot of the objections being raised are missing point. The point is they want to do it and they have reasons for doing it that aren't to do with what we in normal retail payments recognise as being general requirements. So Peter, if you pass on. So that was the presentation. It was an overview, summary of basically what's in the paper. I encourage you to read it. It's available on the EACHA website. And basically, if you want to talk to Fred about it, by all means do so. He's a lovely guy, very smart. I'm very happy to chat to you about what they've done and what they're thinking of doing. And that's it, Hugh. Back over to you.
Tim, that is fabulous. I know we have only scratched the surface of actually a huge topic, and I also commend the paper. It's well written, it's succinct, and it's very thought-provoking indeed. We have some questions from the audience, which is great. So Bob McDowell asks, as a sort of kickoff, what's the distinction between a retail and wholesale for CBDCs? Is retail confined to individuals only, whatever the scale?
It's a good point. So broadly speaking, the way it's being characterized is wholesale from the central bank out to commercial bank. So it's commercial bank money. And then retail is what actually sits below that. So it's all the money movement down there, covering all of the use cases, covering all the various types of user in what you might call a retail environment. So that could be anything. It could be me, it could be you, it could be a small business, it could be a large business, it could be a giant corporation potentially doing remittances across the world. It could be, well, basically, it could be somebody dispersing wages, for example. It could be cross-border payments. It's all of that stuff. So central bankers have got quite a sort of focus on this. They know about this movement of commercial bank money and settlement on the central bank and how this moves and how they keep track of it. But once you go down below that, that in their view is retail payments. It's the retail payment space.
And you mentioned that central banks are not looking at blockchain or distributed ledger technology for these currencies, or it's not on the whole. Obviously, the much vaunted alleged benefit of blockchain is its security, that you do have this absolute record of transactions. In the absence of that as an inherent algorithmic security mechanism, what are these central banks thinking about security of digital currencies in this context? How will they protect, or can you give some instances of how they think they will protect these digital currencies?
So for the most part, this just looks like a standard payment system. All right, so it's protected by all the standard cryptographic mechanisms that we know about today. So we have digital signing and we have encryption wherever it's necessary, various key exchange, etc., etc. There is a recognition that potentially quantum cryptography could actually undermine this. So there are research programs in place to look at that as well. But by and large, there's an assumption, I think, that if existing payment systems can be made secure, and everybody says they are, then a CBDC can be made secure without without putting a DLT in place. I mean, DLT in theory guarantees the reliability of the transaction, prevents the double spend issue, but we do have other ways of doing that. And I think just in terms of the scalability problem, they see this as insuperable with DLT at the moment.
I was going to say, forgive me, the follow-up question is why have the central banks been so allergic to blockchain stroke DLT as a technology base, given that many payment innovators have picked that platform?
Yeah, I think, I mean, it's hard to know, to be perfectly honest, and I have talked to quite a few of them. I think, generally speaking, it's a bit new and it comes with sort of trailing connotations of illegality and problems, you know. So that's something that they tend to avoid. It's basically recognized or understood to have limitations in scalability, so that's a problem. And if you think about it in sort of operational terms, and this is an interesting thing because most central banks have not been thinking about operationalizing the CBDC. It's starting now. But you know, if you have a bunch of entities running a node, you know, basically what happens, you know, when that entity goes bust. Okay, so obviously you've got copies of that ledger, but what is the liability on that particular entity? Is there any entity? Actually, there may be none, right? Because a lot of these cases, there's no money being moved. All the money is continuing to sit in the central bank. But to be fair, that is an issue that actually happens in all of these systems. The other thing is that if they're going to do this, they probably need to run their own node, which they probably don't want to do. They need to do that in order to get a view on the flows and money in the system. But I think that the truth of it is, it tends to be, it's not really a entirely rational decision. But to be fair, a lot of these central banks have not ruled it out. They're just saying at the moment it doesn't look like the way we're going to go.
Very good, thank you. I've got a question here from Matthew Carter. How will solutions like Ripple's cross-border payment solution fit in with CBDCs? And do you think that they, Ripple, will win their case against the SEC with respect to what is a security and or investment contract?
Yeah, that's way above my pay grade. I think in terms of cross-border and things like Ripple, I think that's a real challenge, right? So if CBDCs, if MCBDCs really take off, you know, there is no role for the likes of Ripple. I mean, arguably there's no rule for the likes of Swift, right? I mean, basically because what you've got is sort of instant clearing settlement between central banks, and you know, I mean, if you made that work properly, then you would remove a lot of the inefficiencies and the frictions and the costs and the time delays. It would all just operate, you know, and you don't really need to worry about the capital on either side because you basically would know. But that said, because these systems are being designed in isolation, I suspect the way that cross-border CBDCs will work will require interoperability technology. They're not going to be all the same technology, not built in the same way and built against different requirements because every country's got slightly different requirements. So you won't simply be able to like swap, you know, a euro for a dollar. There's going to be a bunch of systems that sit in the middle and mediate that process, which looks a bit like the stuff that we have today. The BIS, the Bank for International Settlements, has come up, I think, with 3 architectures where that could actually work, which range from everything's built to the same standard and it just works, through to nothing's built to the same standard and there's a massive amount of technology in between. My guess is you'll end up with something in between. So you'll end up with something that provides some level of inefficiency. As for the Ripple thing, I mean, it's kind of hard to know. I mean, obviously, if you look at what's happening in the European Union with things like MiCA, where you know they're looking to regulate stablecoins. Now, obviously, we've seen recently issues with stablecoins losing their tether, notably Tether, which doesn't actually fill you with a huge amount of confidence that they're actually backed by real assets. But the nature of something like MiCA is that you know, it's regulated, and therefore the assets backing the stablecoin really ought to be you know, separated. They ought to be controlled. You ought to know where they are, and anything goes wrong, you ought to be able to access them, just the same as we do today in payment systems. So you could imagine, if you think about something like the digital euro, which even at their best projections is 5 years away, right? And that's true of all major CBDCs. There's an opportunity here for properly managed stablecoins to be put into place. Now, the obvious entity to do that are the commercial banks, because historically commercial banks used to issue their own money. No reason they can't do it again. And the problem there is you have silos. You know, I can go into a shop and I can get, you know, HSBC money will be accepted, but Lloyd's money won't. So then you have to figure out the interoperability problem. But I do think it's a realistic solution to the problem. You know, you have to find an interoperability framework to make that work. And if the requirements of driving CBDC really become urgent before central banks can get ready, I think it's quite likely that we will see some of those solutions actually put in place. But you know, organisations like Ripple, who basically started in an unregulated environment and now having to cope with post hoc regulation, are in quite a difficult position, I think. You know, through possibly no fault of their own. It's not for me to judge one or the other, but yeah, it looks tricky.
Thank you very much. Now, Bob McDowell, having got warmed up with his first question, is now following up, and I think it's related to what you just talked about. He said, as you know, the ECB is a decentralized central bank. Therefore, would CBDCs be designated as German CBDCs, French CBDCs, etc.? And related question, does the decentralization model of the ECB inhibit a more coordinated development across the Eurozone?
I think the current idea is it's a single CBDC, it's a digital euro. It's not going to be separated into specific countries. So effectively, it's going to be legal tender. Legal tender is a term that doesn't really mean very much, but it may well be redefined to mean something across all of the, well, not just the Eurozone, it'll be across all of the, probably the EEA, which is interesting in its own right, because if you're, let's say, Denmark, which has got the krone, what does that mean? I mean, say theoretically we had another run on the banks, 2008. It means, you know, if I'm a Danish citizen and I'm sitting there and I've got, you know, I'm thinking, well, what's going to happen to my money? Why don't I just transfer it to the ECB? You know, because you can. It's central bank money. Why couldn't you do that? Well, you know, there might be things in place to stop it. So, for instance, you know, there's discussions about limits. There's discussions about interest rates. So you'll be able to apply interest to CBDC deposits, but there's no reason they have to be positive interest rates. I mean, they're just interest rates. You know? So there's various possibilities there. But this issue of, like, you know, dollarization effectively is potentially a real problem. You know, how do you know, smaller countries cope with the fact that you've now got potentially access to this this electronic form of money? Part of the answer to that might be, you know, you have to be a US citizen to have a digital dollar. You know, that's possible. It's certainly one of the things that they're looking at. But you've got to get your KYC and AML pretty good for that to happen. So, I mean, it'll be interesting. But the truth is, it's just too early to say for certain. But yeah, at the moment, it will be a centralized digital euro. That is the plan.
In our conversation beforehand, Tim, you mentioned that central banks were probably at the foothills of this, but learning fast. I mean, where do you see pockets of sort of getting ahead on this? And do you think that those banks who have got ahead on it will somehow steal a march?
That's an interesting question. It's very clear that certain organizations are putting vast amounts of money in. I mean, I think that's true of various elements of the Fed in the States. It's clearly true in China, where they have a plethora of what appear to be pilots, okay, as opposed to a single unified system. But it's kind of hard to know exactly what they've got running there. But it clearly is a, you know, a belt and road approach whereby you'll be able to use a digital yuan all the way along this corridor, which of course has got, you know, the US actually quite concerned, because, you know, the last thing they want is to see the dollar use its primacy under any circumstances whatsoever. And again, in the ECB, they're putting in a vast amount of money in research into making this work. There are programs, you know, detailed programs at the Bank of England. We know there's a lot of stuff going on at the Bank of Sweden. And you know, if we look at what the Bank of International Settlements is doing, which is kind of managing this, I mean, they've now got, I think it's 5 digital innovation hubs. I think might be 5. They've just set one up in Stockholm. There's one in London. There's one in Singapore, and whatever. You know, so they're pushing ahead with research in interesting and different areas to try to actually advance this, and also try to, if you like, herd the cats that are the central banks. Like, you know, just try to, let's have a, you know, a single common view of the way that this is going to work. So it's hard to know exactly who's doing what. We know certain places aren't. So Denmark has said it's not going to do anything. I don't think very much is going on in Ireland, although I might be wrong about that. You've got all of these kind of interesting things, like there's the sand dollar in the Bahamas, and all sorts of interesting, what it's called now, but the one in Nigeria, which is being used. So there's all sorts of interesting small scale CBDCs already out there being used, targeting some very specific use cases, frankly. But yeah, where's the money going? I would guess you would just follow the size of the economies. The bigger the central bank, the more money they have to throw at this stuff.
And if you had a crystal ball and you were looking 5 years ahead, how would the landscape be different in your view? Is this going to be something that everyone's picked up on, or are you going to find some literally nation states ahead of others because of the actions of their central bank?
Yeah, I think you are. I think you're going to see a bit of a curate's egg across the world. I think you're going to see, some countries will have gone ahead and delivered and others won't. And again, it will be interesting to see what happens when they do. So as an example, and I don't actually think this is in the central bankers' thinking at the moment, but I think it's an unintentional consequence of going down that route, which is that by providing a payment system that offers access to, let's say, micropayments as an example, there's plenty of other examples, because you've got APIs sitting on the ledger, and these will be secured in some form, hopefully not. Well, no, it doesn't matter. But basically, we'll basically have a system that has a capability, and that capability will be very interesting, at the very least, even without regulation and being forced into do it, to some payment areas that are not well served today. So there's one thought, one theory that you could advance here, which is that merely by having a CBDC that's capable of doing these things, it does force the private sector into addressing some of these use cases that they don't address today. Because if they don't, they're going to start losing revenues. I mean, it's just an inevitability. And it certainly is, it is an aim to sponsor innovation through these CBDCs. So you could have this sort of knock-on effect, which actually goes, oh, okay, that's an interesting thing. We could go and build one of those, and it will be cheaper and faster and more effective and whatever. So there is that. The other one, of course, is that, for many countries, and we saw it, I think, in the UK, and we certainly saw it in the US, if you end up with a crisis like we had with COVID, and you want to disperse funds, this is a great way of doing it, because if you've got proper KYC on your ledger, it's going to be, well, more difficult anyway to mount the kind of large-scale fraud that we've actually seen of these disbursements. But that requires some kind of effective digital identity strategy, and that will be a whole nother presentation.
And has been the subject of webinars with ZN in the past, and you can look them up.
I'm absolutely sure.
Tim, thank you. Do send in any final questions. Just turning back to, you did this research on behalf of the European Automated Clearinghouse Association. Do you think those clearinghouses are going to have to fundamentally rebuild themselves? I mean, is it the clearinghouse is dead, long live the clearinghouse? Or how do you think they have both opportunity and will need to change to adapt to this world?
Yeah, when Target and Target 2 was introduced, the sort of general centralized expectation is that most of the clearinghouses would disappear. I mean, they'd be merged and whatever. Didn't happen. Didn't happen because of national champions, and there's always this underlying issue with the single market. So I think they'll find a way. I think it's, to me anyway, it's fairly obvious that they ought to be playing a role in this. They've got the capability, the knowledge, the operational capability to put stuff in place. The only issue with that is if you've got, if they're part of multiple payment systems, you have the resilience question. If they go down, I'm not saying they would or ever have, but if they do, then you've lost everything, haven't you? But I think there are ways around that. I think the offline use case is a very interesting part because, I mean, I was in Tesco the other day and contactless payments stopped working. Everybody was told to use their card and put it in, put it in the reader, and there's people wandering around with iPhones looking for a slot to take an iPhone. It's it's not as resilient always as we would like, because there's lots of different parties involved and things can go wrong, can't they? So yeah, I mean, I think they'll have a role going forward. I think they should have a role going forward. They just need to position themselves and get involved with it.
Thank you. And we've time for one last question from Dave Birch, who says, it seems to me that most people in the world most of the time actually want dollars, not Bitcoin or anything else. So will a digital dollar dominate everything in the future?
Yeah, I think that's a real possibility. There's a real possibility. So how do you prevent that? Well, some of the central banks I'm working with are going, well, you can't get your digital X unless you're a citizen of this country, because that's part of the process. So I can only transact with whatever that is if I'm a citizen. So that would, in theory, rule out using the digital dollar in some other countries. But equally, you can imagine other countries going, actually, we don't really care about that. We just want a stable currency to actually transact in. So yeah, Dave's point is well made. I think all things being equal, the digital dollar would potentially dominate. I don't think all things will be equal. The world is full of barriers to entry that we can't even see.
Tim, thank you very much indeed. As I've said before, this is an absolutely amazing subject, and there is a huge depth to it. I commend Tim and Christian's paper to everybody, and I would very much like to thank our sponsors for making sure that we are able to put these series of webinars and presentations on. And there are more coming up, so I commend you to go and enjoy future presentations and webinars accordingly. And I would like to thank you as the audience for your active participation and for attending. And I would very much like to thank Tim for a really fascinating discourse on a really seriously interesting subject, and one I think we will hear a lot more of. Thank you very much, and wish you all a very pleasant rest of the day. Thank you.
Thank you, everyone.